Welcome back to Velocity Banking 101, Building Wealth in the Black Community. In our last video, we introduced you to the power of velocity banking. Today, we're taking it a step further, a savings of over $1,400 in just 2 more months. Don't wait another day, family. Let's put our money in the right places so we can become investors instead of living paycheck to paycheck. That's right, $1,400 stays in your pocket instead of lining the pockets of credit card companies and your bank. And that's just the beginning. This eye-opening follow-up will break down months 3 and 4 of our debt repayment journey. We'll show you side-by-side comparisons of traditional repayment versus velocity banking. You'll see in real time how this method accelerates your debt payoff and saves you hundreds in interest. But it's not just about the numbers. Velocity banking will also help your daily financial decisions and give you a psychological boost by allowing you to see your debt decrease faster. Remember that cash flow is king, and where you keep that cash flow is the key to success with your finances. So, letting your cash flow sit in your checking or savings account makes the bank money, not you. Take control of your cash flow and let it work for you by sitting it on your debt tool. Let's see the power of velocity banking in detail. This is what month 3 will look like without velocity banking. You have a credit card balance of $9,932.78 carried over from month 2. If you want to see how we got to this number, stop watching this video and watch our previous video, What Banks Don't Want You to Know. Now let's get back to our example. With a monthly payment of $200, only $34.45 was paid towards the principal, calculated by taking the $200 monthly payment minus the $165.55 interest payment. With a new balance of $9,898.32, this is what month 4 will look like. You have a credit card balance of $9,898.32. With a monthly payment of $200, only $35.03 was paid towards the principal, calculated by taking the $200 monthly payment minus the $164.97 interest payment, with a new balance of $9,863.29. Now let's compare that to if we were using velocity banking. This is what month 3 would look like. The starting balance for the credit card is $9,273.20. Once they get paid, they will put their $3,000 of their $5,000 income on the card. Remember, they must keep $2,000 out of expenses that cannot be paid with a credit card. This will bring the balance down to $6,273.20. Throughout the month, they will pay their expenses of $2,500. Again, it is $2,500 because the monthly payment of $200 was satisfied when you dumped the $3,000 of your income into the credit card. So now that $200 has become part of the cash flow, our cash flow is now $500. This will bring the balance back up to $8,773.20. The interest is calculated by taking the average daily balance, which is $9,273.20 the high, plus $6,273.20 the low, dividing by 2, multiplying by our interest rate of 20%, dividing by 12, which equals $129.55 compared to $165.55 of interest in month 3 without velocity banking. Our new balance is $8,902.75. This is what month 4 will look like when using velocity banking. The starting balance for the credit card is $8,902.75. Once they get paid, they will put their $3,000 of their $5,000 income on the card. Remember, they must keep $2,000 out of expenses that cannot be paid with a credit card. This will bring the balance down to $5,902.75. Throughout the month, they will pay their expenses of $2,500. This will bring the balance back up to $8,402.75. The interest is calculated by taking the average daily balance, which is $8,902.75, the high plus $5,902.75 the low, dividing by 2, multiplying by our interest rate of 20%, dividing by 12, which equals $123.38, compared to $164.97 of interest in month 4 without velocity banking. Our new balance is $8,526.13. Now, look at our savings from month 4 when using velocity banking, a savings of $77.59 of interest, and our balance is now at $8,526.13 versus $9,863.29, with a total savings of $1,414.75. The power of velocity banking in just 4 months. Quit making money to just pay bills. Start changing your mindset to making money so it can make more money. Velocity banking is giving you the power to do just that. Don't let fear paralyze you. Remember, the power of this strategy lies in consistency and discipline. Stick with it, and you'll see your debt disappear faster than you ever thought possible. If you caught the nugget about cash flow, put your answer in the comments below. Make sure you tune in to the next episode to see how much progress we will have made after 6 months of using velocity banking compared to doing things the traditional way. If you found this walkthrough helpful, please hit the like button and subscribe. Let's make this community the biggest that attacks debt and invest our money so it can make more money. If you want to review how we got here, watch this video on the screen. Remember, family, you gotta think rich to grow rich or you won't achieve it.